Hello, everybody. So today, this is a Patreon request. Today, I want to cover the trade desk. The trade desk tumbled yesterday, minus 33% in one day. That's pretty crazy. You know, I'm used to minus 20%, but minus 33%, that's like 130% more than my usual earnings miss. Because, yeah, they missed on revenue. That's the reason why the stock is down this much. But I figured this would be an opportunity to do a full analysis on the trade desk and tell you about what I think of this Wall Street darling. Because when you see how many analysts this stock has, you quickly realize this is a Wall Street darling. This stock is loved very much, and even though the performance over the past 1 year is now not very good at 10%, given the fact that it dropped 33%, if you go back further out, not only do you beat the S&P 500, but we don't really care about beating the S&P 500 on this channel. On this channel, we're trying to beat the NASDAQ. The NASDAQ, over the same period since IPO of Trade Desk, was 20.5% average annual return. The Trade Desk has returned 48% ARR. So we are getting into Tesla-ish territory, Tesla-ish returns for this stock over an 8-year period. This stock has outperformed. Hence, this is going to be a stock that doesn't fit into my lowest valuation bucket. It fits in my highest quality and need to ignore valuation bucket. And I have a few stocks in this bucket that I own. The biggest one in there is Tesla. Many of you follow my HIMSS video. You don't understand why I own Tesla. Well, I own Tesla because it's the best in class in its sector, right? In the EV sector. Well, if you want to own the best in class stock in the advertising sector, I would argue that's the Trade Desk. The Trade Desk is the best in class company in the advertising sector, and I can argue that alone based on the annual returns that they've been able to achieve. In fact, even if you take the Trade Desk and you compare it to, say, almost pure plays in advertising pure plays would be Meta, right? And Google. I mean, although Google is growing a cloud division a little bit, but I would argue both Meta and Google makes a lot of money on advertising on YouTube. All of these are nearly pure plays advertising. You can see their total return has been nothing close to the Trade Desk. The Trade Desk has more than outperformed them. The Trade Desk also grows faster than them. It's predicted to grow faster in the next 12 months, 19%. Google is predicted to grow 11%, Meta 17%. The Trade Desk, quite frankly, is highly profitable at 19%. Okay, it's not big tech profitability, but it's highly profitable. Gross margin is higher than Google, lower than Meta. Meta is more of a pure play advertising. But when I look at the valuation, yeah, out of the three, Meta looks the cheapest. The Trade Desk is trading in line with a Google on enterprise value over gross profit over revenue growth of a 1 for both of them, but the Trade Desk grows a little faster, but is a little less profitable, and the opposite is like that for Google, a little more profitable but a little slower growth. I do own Google. I don't own the Trade Desk, but you know, it's clearly the Trade Desk, in my view, fits in the highest quality bucket, but you need to ignore the valuation because the valuation is expensive, and for that valuation, you can get a Google. So what do you get? You get the best-in-class company in advertising. So let's talk a little bit about what the Trade Desk does. They're all about effective advertising and targeted advertising. What are they? They're a platform. It's a platform for advertisers. Let's say you have a brand, you're trying to sell, I don't know, a shoe brand, whatever. You want to do omni-channel advertising. You want to advertise everywhere. You want to advertise on Facebook, on Instagram, but you also want to advertise on Google and on YouTube. And then maybe you want to advertise on Netflix when people watch their shows on the low-cost subscription. You want to advertise on Shopify. And maybe you want to advertise in a subway in a big city. You want to advertise on TV. You want to advertise on Roku. How many channels did I just list? 7 or 8? Without the Trade Desk platform, you would have to deal with 7 or 8 platforms. With the Trade Desk platform, you just deal with one platform, the Trade Desk. And the Trade Desk incorporates elements such as all of the costs of all of these ads, bundle all of the providers of ads together, but also it incorporates data, like time of day, like weather. If you're trying to sell ice cream, weather may be relevant. If you're trying to sell, I don't know, skiing, time of year, region may be relevant. They incorporate geography, all sorts of stuff, and they bid for you. The trade desk is able to bid for you on all these different platforms and get you the highest ROI. This is what this chart represents. You can see the more channels you get, the higher the return on investments you get, because an ad on Spotify for folks listening to music may be very cheap at a specific time of day at that specific moment. So you go ahead and you advertise for your shoe, and at that same moment you can't advertise on Roku because everybody wants to advertise on Roku at that moment. So the software helps you arbitrage. It helps you decide which channel is the best at any time for your brand. There's also a lot of work when they do around the cookie 2.0s, like the next generation cookie. Everything has to do with the open internet. I'm not sure I understand it fully, but if there's privacy issues, there are internet issues. It's all about how you follow the customer, and they are very supportive of finding ways to follow the customer and advertise to the customer and advertise where the customer already is. And so a lot of big companies go through the trade desk for their advertising needs. And, this company is highly diversified. It's diversified by industry. It's diversified globally, right? They got the biggest spending regions, namely North America, Europe, Asia Pacific. You can see very in China, which is, pretty impressive. They got the biggest market. They get the data from all sorts of data providers to increase advertising. You will recognize Nielsen if you follow my videos, for example, on direct-to-consumer stocks like Elf, etc. I talk about Nielsen and the role they play, but they also get credit data, they also get spending data of all sorts, and the software helps you pick the highest return on investment channel. It helps you bid across different platforms. It uses tons of data to help you make the best choices, and it's all in a single, easy-to-use platform, and it's all about increasing the ROI for advertisers. This is what the trade desk does. It's a software that is in the front of the eyes of the marketing department at the company advertising the product. And I am sure that, there's big companies. One example, for example, they showed on the website is LVMH, right? LVMH uses this to advertise its luxury products, but any main brand you can think of, not all of them, but many of them likely use the trade desk. And sure enough, they have a long list of big brands that use the trade desk to do their advertising. It's kind of the Shopify for advertising. Shopify is best in class for websites and having a sales website. This is best in class for running a marketing campaign. They are very hopeful about the growth. It's all about the growth. A business with this valuation is going to be all about the growth. There's two big areas for growth when it comes to the trade desk. One of them is connected TVs. People are replacing their linear TVs with connected TVs. There are 90 million households, 120 million devices where they have access to connected TVs. Not only are connected TVs good for them because they get to add them to their system, but also as traditional TV shifts toward connected TV, the cost per 1,000, the money you make on 1,000 impressions is actually twice as high on connected TV than it is on regular TV advertising because it's targeted. And when you can target the customer, you can charge more. So that's one big area of growth right now that is being discussed by the trade desk. Another one, of course, is going international. This company still has 88% of the spend on their platform from the USA, but they are hoping to go international, and they likely will grow international too. So 2/3 of the growth could come from the international business. And lastly, I will show you the numbers. And to me, like I said, they missed on revenue by 2.4%. And that's the only explanation that I can find as to why the stock is down. Sure, there is an integration of software that they implemented that's going a little slower than expected. And there's also a reorganization of the teams towards agile teams. But all of this is good stuff. in my view, the stock overreacted because of a revenue miss, and the analysts said this target was just 2% higher, and so they're concerned about deceleration. I don't think that's the case. If you look at the trends, the trend is very clear. You got an S-curve, you got exponentiality in that growth. If you look at it quarterly, you also have that exponentiality. You can see the seasonality, of course. Q4, the Christmas season, is always the highest for advertising, and you can see the adjusted EBITDA, the proxy for cash flow, is really in the right direction. So this is a company that has begun to print cash, and so Wall Street is disappointed, because it was an earnings miss. But that's what you get for these stocks. Whenever a stock is highly valued, they better not miss. And if they miss, the stock drops by 33%. So I say, if you want to be in the advertising sector, if you want to be in the best-in-class play in the advertising sector, on the advertiser end, on the buy side, right? You're not on the content end, right? Google is the content end. Google sells advertising on YouTube. That's a different side of advertising. But if you want to be on the buying end of the ads, that's the best-in-class app, in my view. It's just that I'm not the only one thinking that. The whole market seems to be thinking that. This is why this company is trading at 13 times forward revenue is what it's trading at, and it's likely trading at 16, 17 times current revenue. So the trade desk is probably the best in advertising, in the advertising platform on the buy side, right? I can think of other companies that are like that. CrowdStrike is one that comes to mind. CrowdStrike is the best in cloud cybersecurity, and so CrowdStrike is trading at similar nosebleed valuations. These stocks fit in my bucket, highest quality, regardless of valuation, and so that's why you get these issues. But you're not getting the number 1-2 stock if you can get exposure to that one. This is not a sector that I need exposure to right now, which is why I'm staying away. But I think if any of you has been wanting to get into the stock, this is likely a good moment to look at this one again. Anyways, this was not investment advice, not financial advice. This is just entertainment on this channel, and I hope you were entertained. Please like, please subscribe. Thank you for watching, and have a wonderful, wonderful day.